Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, April 4th, 2024. A little bit larger update today as I'm updating the charts. If you remember yesterday when I was discussing what economic data would be coming out today and then what would follow, we basically had two early numbers coming out at 8:30 a.m. Eastern, and then for the balance of the day, I believe we had a very large amount of Fed. I think it was like six total. Yes, a total of six, mostly Fed presidents from Philadelphia, Richmond, Chicago, Cleveland, Minneapolis, and a Fed governor, all out there speaking, and some of them still now we have one left. The Fed governor will be starting at 7:30 p.m. Eastern. But the balance of the Fed presidents that were speaking today basically were echoing what turned the market lower the other day in a sell-off, and that is that they're not likely to cut rates possibly this year. If inflation continues to kick up its face, kick up its whatever you want to call it, they may not cut the rate at all in 2024. Well, that just sent the market in a tailspin. And being that I'm just going to start here with the ES, I'm starting on a 4-hour chart. I was not counting a triangle pattern, but the market, I've readjusted the count, but the one was up here and actually was up even higher. I've got to tell you, I think it might have been even higher than that. But the market came down and broke. Yeah, it was right there. And the market substantially broke below that level, which was 52.20. I gave it to 20. It substantially broke it. In fact, it broke below 5,200 and right now closed below 5,200 and is still trading after that extra hour that they give at the end of the day. It's still trading below 5,200. So what does that all mean? I'm going to bring this back into view. And one more time, let me go out to the weekly. This is going to be a little bit longer, so bear with me. Again, I had a cycle third wave that completed in January of 2022. That then suggests that we're within a cycle fourth wave correction, which will consist of an A, B, C structure on a primary degree. So what we've now done is primary wave A completed in October of 2022. Then we began a primary B wave. Still, I feel strongly, and I've carried that forward, that it's a primary B wave. Now, on the basis of the futures market, the market did exceed that 1.382 irregular B wave Fibonacci level. On the cash market, it did not. So that remained active to me. That remained important for me, and that the market needed to actually finish this off. But I continued to feel that it was a primary B wave and not a larger move up in terms of a primary fifth wave up, let's say, to complete cycle wave 3 up at these levels. Now, breaking this down. So what I've done is I've put the B up there. Now I've done this before and I've run all the numbers and I've stacked it all up, and the market decides to turn around and, I'm not going to say make a fool out of me, but that's sometimes what it feels like, to be honest with you. But it's not necessarily going to change my mind if they decide to run up on tomorrow's unemployment insurance report and create this whole additional scenario like, oh, they are going to cut after 5 Fed presidents basically got hawkish on rates being cut. Now, so it would be a little bit surprising. And so there would be absolutely a mad dash scramble for all of these folks that came in and started turning their positions. It was a strong rejection, and it didn't even make a new high today. It was just a strong rejection of higher levels. The Dow finishing down 530. The S&P now down 73. and still moving lower. The NASDAQ down 317. The Russell down 23. These are massive reversals that just don't appear to be over. They're not stepping back in to buy it up. So, and again, buyers may have come in and shown up, but they were quickly absorbed by the market and crushed. So they didn't provide a little bounce here, a little bounce there, but they were overwhelmed. The selling just overwhelmed anything that happened. In fact, we can take it down. Let's look at that at the 1 hour. Bam. So the real selling started midday, we'll say. But you can see what it did. It broke the 13. It broke the 20. It closed well below the 20. It accelerated below the 20. So on the daily, the next up would be that it's moving down towards the 50, which is at 51.38. Now, mind you, we still have, I believe it's 51.83, which will negate and start to put a negative picture on the cycles. And so instead of feeling that maybe we're going to bottom into or cycles will put in a low in the end of April, beginning of May, that might start to change if this market just continues to weaken at a rapid pace. So much to now watch for. Again, we're getting ready to move over into earnings season, which begins, I think, on the 14th, that week of April the 14th, and begins with the banks. Now, they got a hit today. So everything, they start to make these adjustments. And it's now, I believe, time to pay attention for what's turning. Now, I just want to add, you see, I put the 5, the C, and the B, they will line up. When you move the chart around, they move with it. So it's not here, it's actually here. The B and the C are actually here. Now, here is what I am not saying. As you know, I present an Elliott wave picture. Again, let me make reference. I do not suggest or make recommendations on trades. I do not make any recommendations about how somebody else should trade. All those decisions are up to us as individual traders. I am providing my view of where the market is and what I would look for going forward from here. So if you disagree, that's fine. I don't have a problem with that. In fact, I welcome opposing views. But I don't make recommendations. I understand that a lot of people are going to be like, well, you said the top is in. I am suggesting, I am putting my B wave there. So to me, yes, I do believe we have a primary degree top being put in. But if the market should turn and race back up and go above 53.33 and maybe try to get to 5,400, I have to be honest with you. Tomorrow's the day that they got to do it. Outside of that, I think time's up. Unless we get into earnings and from day one, they blow the doors off everything. That's kind of what I believe has to happen. If we're now going to confront higher interest rates, or even if they just keep them in the same level, all right, 5.25, 5.5, that's the range that we've now dealt with for several months. Well, that throws a lot of things into a little bit of a different position when we're not going to get the lower rates. When the dollar, we'll see what happens to the dollar. In fact, if inflation continues to be problematic, that hawkish view might just step up and go like, well, I guess we got to bump it up. We need to rein in the excess. We need to pull it in. And I'm telling you, several ways that they can do it. We're not having that discussion though right now. Okay, back to the S&P. Here we are on the daily. Not looking good. Very strong reaction coming down in the RSI on the daily. Uh, a negative close for the daily candle, not necessarily totally, but fairly bearish, looking like it's going to head towards 51.43, which is where the 50 period exponential moving average sits. If that breaks, I believe we will again get several rounds of acceleration as we continue to fall. Next up, underneath all that, we have support at 5,000. But here that sits at 51.43. Before that, I'm sure it's like 51.83 is the number that keeps ringing in my mind. And that could be right. 51.70 also sits there. These fourth waves, I think when they start to break, it gives additional additional evidence that tops are in and we are beginning to head lower. Now, the fact is they didn't just walk this down. It fell, and it fell strong. It was everybody out of the pool and just get out of the way. They were moving it lower. So we'll see what they do with the jobs reports tomorrow. And I'm going to bring this down to the 4-hour chart, and I'm going to open it up. So now we have 1, 2, 3, 4. Those all stayed the same. And then I have 1, 2, 1, 2, 3, 4, 5, 3. So I had to move the 3 over. And I went through all of this in the weekend in the podcasts, that if this would be necessary, and I gave the levels, and I talked about the weakness that is due to the cycles, the 3-month and the 1-month topping and pointing down. Now that could go until the end of April, and then we get a cycle turn, and then the cycle will point higher, both of them. Now, well, what could this start to be? Well, look, I got a 1 and a 2. This is a third. It's a minuet 3. So I believe we're forming our first 5 waves down. On a 4-hour chart, I would use the minuet degree, not a minor. I use the minuet. Now, mind you, if we are indeed in that primary C wave, it consists of 5 waves of intermediate degree, labeled 1, 2, 3, 4, 5. We would be in intermediate wave 1, and in the very, very beginning stages of that intermediate wave 1. Inside of intermediate wave 1, we have 5 waves of minor degree. That's this degree labeled as such. And then what's inside that minor wave 1? 5 waves of minute degree. So if anything, I could put this maybe to minute, but I'm leaving it at minuet. And then what's inside that minute wave 1? 5 waves of minuet degree, and that's where we are. So just starting, and this is the third. All of it, maybe. But what I can do here is I can add extensions. So you can see the equality where this wave would equal that wave exceeded and stays below it. It's not they're going to go back and try to take it. That was at 52.09. So our next up is 51.48. Which again, go out to the daily, we're kind of bumping up against that 200. So the 200 may provide some support off the daily for here, and that puts in a third. Then we get a wave 4 bounce. Then it comes down again. And we'll put our measurements in, because then I'll be able to do 1 to 5. But right now, this is what I'm looking for. I'm looking for continuation to 51.48. That's 1.618. And that doesn't mean that's where it's going to stop. It's only a suggestion. It's a level of support based on Fibonacci. If it goes through that, well, then we continue to drop, and we have other price support much lower. 2.618 brings us down to 5,050 into that area. And as we break these levels, right, that 4 is at 5,000 on the 4-hour chart. So again, we can bring it back down. I can take it down to the hourly chart, and we go back inside and we look. How does that look inside this thing? Well, straight down. There aren't any even little bounces except right here at the end of the day. Now, that tells a multitude of information, or gives us a multitude of information. We didn't come down in like that. It's straight down. Is this one of three? Is this all of three? Don't know. I can break it down. Let's take a look at the 30-minute chart. Let's see what it looks like. Again, do you see there's nothing? Bounce there, little bounce there towards the end of the day. Let's bring it down to the 15-minute chart. We're taking a look at the internals in here. Do you see? It went straight down. There was a little bounce there, another one there, another bounce there. But they were swallowed. In other words, the buyers moved in and the sellers were there going, thank you, and crushed it immediately, all within the same bar. Bounce, yes. So, I mean, could it be? Very, very could be. Could be a 1, 2, 3, 4, 1, 2, 3, 4, 5. Okay, so is this 3, or is it only one of 3? Again, questions, right? So I've just taken it down from a 4-hour to a 15-minute chart, and you can see there aren't any notable green bars until the very end of the day. That's the bell. The bell rang, got a little buyer. They came back in, got some little buyers. The selling is pretty intense. Now, if you're going to trade it, the inside these bars, it can move real fast. One thing I've noticed as a day trader, so you're stepping in and out of the market, is that you get a bunch of sell orders that come in and they hit all the bids. And then when they're done, there's nothing coming in directly behind it to provide additional offers or to push and hit more bids. And if a buy order comes in, remember, algorithmically, most of them are coming in at the market. So you get a buy order, 50 or 100 or 200 futures need to be purchased, and it produces a vacuum. The sellers are done. Their orders are complete. They're off matching stuff up or doing what they do, maybe getting ready to load the next order in. I don't know. But you get that order and it just moves it quickly. And then that's hit by the next seller coming in and pushes it right back down. So you're going to get that ebb and flow as the flow of the market orders, or flow of the market comes into play. Be careful on that. You see, oh, what a great bounce. So people jump in and then they get crushed. That's my point. All right. So what can we look for tomorrow? I'm off of a 15-minute chart. It's just really hard to pick points of where we can find something, right? I mean, here we have these numbers coming in. And if I had to, you can continually run some fibs just in terms of retracements, high to low. Now, if we're looking for something that's going to come back, remember, these are downside. So we just got the upside. Well, that 0.236, that's the whole thing from today. A 0.236 retracement, a bounce back up would be 52.20, 382, 52.35, 50, 52.50, 618, 52.62, etc. If we get a strong enough bounce, I mean, they're just coming back in, you're just buying because everybody's like, oh, this was all nonsense, we're going. Yeah, you could expect 50 to 62%. But then I would say 1 of 3, 2 of 3, and the next one we slam down again. I don't think this is over. I'm pretty okay with 1, 2. I mean, this presented problems all the way around. This was yesterday on the little bit of hawkish statements from Powell. That was just slightly hawkish. These are like very back in that, and that's what we got. So let me take this guy off, just leaving the other ones on. So pullbacks, notwithstanding, I would be expecting some additional. I think maybe if we get down to 51.50, we might get a little bit stronger, decent, bigger bounce. But we're going to have to play it intraday. And in that respect, I'm going to be going down to a 5-minute, a 2-minute. We'll be looking at that, looking at the moving averages, because you can see right now, it on the 15-minute chart has broken all of them. And the 15, the 13, and the 20 are spiking down. They're not even just rambling down, they're spiking. The 50 turned, the 200 turning, all pointing strongly lower. That doesn't set a very positive picture to start. Okay, going over into the NASDAQ now. Let me go back out. Let me start back out and let's look at that weekly. Let's look at the weekly chart here. I still had some, I thought I did all this, but I'm not sure why. Oh, that's putting that in, but I've left the triangle pattern in there. So let me go to the 4-hour chart. And I left these up, but you can see how deeply it broke it. So I'm leaving them there. And I'm going to stop that big extension of the channel and pull it back into here, and then pull this one back to that 4. I don't need those running up anymore. So there we have. So still, I know that, and that could go over to there. This actually did produce a new high, in case you're wondering, not by a whole lot, but it did produce a new high above that high. So that's why I put the completion point. So here we are on the 4-hour chart, right? So we have 1, 2, 3, 4, 5. And I put the minor 5 and the intermediate C and the primary B all above it. Same deal. This has been the weak link, actually. So this one, I am like, I truly, what presented the problems, and I'll go over that in a minute, is what this was. But I had my thoughts about it, but I let it kind of sit until I got confirmation. That confirmation came when we broke. So again, what we're looking at here is 1, 2, 3, 4, and there's the 5. And it did finish a triangle pattern, moving the 3 down as I suggested I would do. And this actually came down and broke, not quite. But if the 4 was have been there, it broke the 4, which is what destroyed this pattern as being corrective in a 4. And I moved the 4 down and moved the 3 and then put in the 5. Now, let's go inside. Okay, we'll go inside. The 3, the 4, and here's the 5. So now what do we have here? We actually have an expanding diagonal for wave 1. That's the places they come in wave 1 or they come in a wave 5. Either direction. So we finish a diagonal and we begun another. Wave 1. So I got a 1, 2, and then a 1, 2, 3, 4, 5. Wave 1. A, B, C, wave 2, and we're coming down in a third. And then basically it's 3 of 3. So it's sub-minuet wave 3 of minuet wave 3. Power, a lot of power. Look at that hourly chart. There's nothing. 1, 2, 3 hours of straight down. Little bounce after the bell, and then it's right back down. And now they're going to try. They're going to try to close this with a green bar to try to do something. Who knows? So again, I can come down. I'm going to look at the 30-minute chart, and we're going to see, is there anything? No. I'm going to look at the 15. I'm going to tell you, I don't think there are because I was checking it before. Nothing till the very end of the day. This is after. There's the bell. There's after the bell. Nothing. There was one little bounce there, one here and here. Same as we saw in the NASDAQ. And they were totally absorbed and overwhelmed by the selling. Build, boom, out, smash. And that's pretty much how it went. I got to tell you, that is pretty much how it went. So as a day trader, you were like, oh, there's a bounce. I think I'll jump in. Whoops. No. Not only did you think, oh, I'll go make a quick 100, you lost 500. And by hanging on, thinking they might bounce it again, it's because they weren't coming back in. So what am I looking at? There's the 2. 1 of 3. 3 down here. We have to wait and see. So what do I got in terms of what levels can we take a look at? Here it is for the third wave. As we saw in the S&P, here in the NASDAQ, it has exceeded. Wave 3 already exceeding being equal to wave 1, and that's on the sub-minuet level. So I have one other that I can put down here, and I can put it here for the minor. In fact, I'll do that. I don't want to stick too much on because it can really cloud up the chart, but we can put it in there. Here, it exceeded 1.618, where this whole larger third already has exceeded. That's not correct. I didn't get that quite right. Let me remove that one. And let me start it over. I won't do it from the top. Let's try that again. Yep, now I got it. It might be just a slight different number. But still, pretty much right there. It came down to 1.618 bounce, but now did come down below it. They're going to try to keep it up and get it green to finish the after hour. But here, 1.618, so what's up next? 2.618, 17,000, 75, 770, wow, 17,750-ish. So 1.618, which is where subminuet wave 3 would be 1.618 times the length of subminuet wave 1, comes in at 17,903. That's the massive, that's the strength of these drops, what they represented today in terms of this market started dropping from 18,568, went up and hit it twice, which by the way was a major resistance zone. I got to say a major resistance zone. And I'm going to give credit where credit is due. My colleague, Sasha Goring, who runs the trade room with me, had that this morning. Gave the 2-hour room this morning and hit it twice. And that was all she wrote. And when the cooking to the downside started, he got another signal and he was in much higher and just collected a very tidy sum as a day trade. As this thing just went and went and went. It was not difficult to hold on to it. There were no signs that they were stopping. It just was like boom, 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 boom. And it just walked and walked. In fact, it ran at some points and it just went through everything. So again, credit where credit is due. 18,568. That is my friend Sasha. And extremely accurate. Touched it twice, could not get through it, not even by a tick. And then it dropped. So 1, 2, all the way down. I think there's still more to come, but we will get a bounce. Now, here's the trick. Here's the gig. There will be bounces. Remember, 1, 2, 3, 4, 5. 2 corrects wave 1. Wave 4 corrects wave 3. And when the whole sequence is done, then we'll go back. That completes 1, 2, 3, 4, 5. Completes one of the next degree higher. So we're coming down here in a subminuet 5 waves to complete minuet wave 3. But when we complete minuet wave 3, 4, and 5, it's going to complete minute wave 1. Then we get a minute wave 2, which would be an ABC. So building blocks, we're now going in the opposite direction. We're building our way down. And cycles will coincide where one of like a 1 or 3 or something completes, and we get that swing higher. Now, what we might start to get in terms of cycles is like a right hand or a left hand translation. What starts to look more bearish versus what presented. So that's why we're kind of keeping an eye on the cycles here, because if it breaks a certain level, it shifts the whole cycle interpretation from, oh, it's remained in a bullish uptrend, and that's now been broken. And so the focus becomes that it's working its way lower. Market-wise. So here it is in the NASDAQ. What can we look for tomorrow? I think we're going to get some additional downside before we get any type of a more decent bounce. And don't forget, we got the Asian markets and we got the European markets that got to react. Now, they might come in with a whole different story. I don't know. But we'll see. Now, the only thing that can break this whole picture is if this market turns around and works its way back above 18,500. They got to take everything back that happened today. Now, can it? Well, I can't say it can't, and I won't say it won't. But that's not what I'm looking for now. I think we got a very clear message today on what the markets are doing. And what they reacted to was directly interpreting what Fed presidents were saying. The ones who are in control of making the decision about when interest rates are going to be cut and why. Now, so we're getting a lot of signals now saying that, well, don't forget that just yesterday, or Bostic, when he spoke, he was saying, well, maybe in the fourth quarter, maybe December. So today was coming in and they're basically saying, maybe not at all in 2024. Now that puts this whole market in a much different position. And it puts another spin on when they do finally start to cut rates. Are we then going to be so deep into a corrective process that it's going to come along with a devaluation of the dollar? Are we then going to be in a deflationary period versus we're trying to figure out this inflationary period? Is it truly under control? Has it gone on too long that it's going to be too hard of a turn and we're going to go from inflation to deflation? Assets will deflate. A lot of things are going to happen if that comes in. It's a whole other thing, folks. It's a whole other thing. Right now, not going to go into it. I'm going to keep this together. That is just an update on the NASDAQ and the S&P on an Elliott basis and some fibs. Tomorrow morning, we have, in terms of numbers, we have the U.S. non-farm payrolls, the unemployment rate, and the hourly wages. And then we have Boston Fed President Susan Collins, Richmond Fed President Tom Barkin, Dallas Fed President Lori Logan, and Fed Governor Michelle Bowman, all speaking beginning at 8:30 a.m. So are they going to back up what everybody else is saying, or are they the doves? They're going to be dovish. I don't know. And we also have at 3 p.m. Eastern, we have consumer credit. So that could be a boost because consumer credit now is being reported as possibly dropping quite a bit. But I doubt it. I don't think so. I think consumers are spending money rather than knocking it off their credit cards. I think they're adding it to their credit cards. So here we have it. Now, tomorrow's also an expiration. Today's move, we saw a lot of gamma swings. That was the other part of what contributed to a lot of what happened this afternoon. We're gamma swings in preparation for today's expiration, right? 0 DTE options that expired today in the ES and the spiders, in the SPX, in the Qs, in the TQs, and the SQs, et cetera, et cetera, et cetera. Everything, they have 0 DTE options. And when this thing started to kick in, wow, those no longer, right? Those short puts, oops. As this market is dropping, you got longer than you ever thought you possible. And it happened so fast that all you could do was sell into the weakness. And that's what happens. And then it just perpetuated and rolled and didn't stop. So the next strike, the next strike, the next strike. What will happen tomorrow? We now have also all of these stocks that need to have a weekly expiration. How's that going to affect it? What's going to happen? We shall see. Now, the next podcast I will try to put up on Saturday. In fact, I will likely need to after this week to give a really clean update on everything. But the next Elliott Wave update will come on Monday, April the 8th.